After 24 hours, you guys can go into your test and you can see what you missed. So sometime tomorrow, you can go into that exam. I would encourage you to see what questions you missed. That's part of the learning process. Not hearing any other questions, then I'm going to start chapter 4. I'll give you guys, I saw a few more people come in, so let me give you one last chance to ask questions before we start. Anybody have anything on their minds? Okay, then here's our agenda for today. Chapter 4 is either going to be really easy for you or really difficult. And here's why I say that. If you've done well on chapters 1 through 3, if you have those rules of debits and credits down, if you can go through a transaction, understand where it fits under the accounting equation, and you've worked and you've worked and you've worked at the chapter 3 homework, and you know how to debit and how to credit things, this chapter is going to be extremely easy, because what we're going to do is we're going to use the same mental mechanics now that we've been using for chapters 2 and 3, but instead of using T accounts, which are learning tools, we're going to transition today into real life documents called accounting journals and accounting ledgers. And every single company in the world uses journals and ledgers to keep track of this accounting information system that we've been studying. So some people might say, well, then why did we have to use T accounts? If the real world uses journals and ledgers, why did we even have to bother with T accounts? Remember, T accounts are learning tools that help us analyze transactions. And so they're an intermediate step between fully jumping into journals and ledgers. I still use T accounts to this very day in all of the classes that I teach and in all of the classes that I take. So the time spent invested in chapter 3 is critically important. I mentioned earlier that accounting is called sequential learning. And what that means is, again, think of that pyramid. You can't go on to the second layer of the pyramid until you got the bottom foundation. So that's why I said the good news is if you feel comfortable with 2 and 3, chapter 4 is going to be a piece of cake, because we're going to take the same principles that you've been learning about and just change the documents that we record the transactions in. On the flip side, if you've struggled with the test, if you didn't, I was very disappointed in how many people did not do the chapter 3 homework. You cannot move on in this class until you go back and you review and remediate yourself. If there's any weaknesses on debits and credits, you got to go back and remediate those weaknesses. That means work through more problems until you get it before you move on to that second level of the pyramid, which we're now on. So today, we're going to talk about that transition from using T accounts to using journals and ledgers. We're first going to start off by talking about what is a journal? What is it? What do we need it for? And what's it do for us? We'll go through some journalizing rules. And then we'll talk about the fact about the journal is great for keeping an economic diary of what happens to a company. But there's one thing the journal doesn't do, and that's it does not track balances. And so we're going to have to move to a second document called the general ledger that's going to keep track of all the balances for all of our accounts. And we're going to go through this process, this really tedious process called the posting process. And then, like always, that same trial balance that we've been using to verify the equality of debits and credits is going to come back in the same format, except we're going to be pulling our totals from a ledger instead of from T accounts. So that's where we're headed today. Just like I did on the first exam, I would encourage you guys to go through these agendas and use it as a checkoff sheet. Any questions on where we're headed, you can simply just unmute yourself. If you don't have the ability to speak, you can also type in the chat room. Okay. By the way, I did want to warn you that there is a discussion post, that the original post is due tonight. Remember, we do one discussion post a week. The original post is due by Thursday night. The reply to 2 classmates is due by Sunday night. So while we're here, let's just go take a quick look at that, because I want to make sure you know how to do a little bit of research. So I'm going to click the discussions link. We're going to go open the discussion post. And it talks about real live balance sheets. And so it says, we've just learned about assets, liabilities, and equity accounts in our first few weeks. Go Google the most recent 10K. That's a word I want in your notes. Every single business major needs to understand what a 10K is. And that is the SEC lingo for a set of financial statements for a publicly held company. Specifically, we're going to be interested in the balance sheet. So it says, go Google the most recent 10K. I'm going to do that with you to show you how. For example, if I chose Walmart, I would put into Google Walmart's most recent 10K. And within that 10K, I want you looking for the balance sheet. And the note tells you that this is usually in item 8. Item 8. And so here's what you're going to do in the discussion post. You and I are going to learn a lot from our classmates by having all of us do different companies, right? And again, when you guys take this class, I want you to think bigger picture than, I just need to get a B or a C in this class to pass it. That's not good enough. What I want you guys thinking is bigger picture. What can I learn from Giselle's post? Or what can I learn from Philip's post that is going to help me someday make money? Okay, well, I learned a lot from student posts. I became interested in Michael's last year. Michael's is a big craft company whose stock cost $10 a share. I had no idea how Michael was doing, but by looking at the students' post, I was able to learn a whole lot about a lot of different companies. I want you guys to think in terms of, wow, how can I use this to build wealth in the future? You may not have money right now because you're students, but eventually there's not a person in this room that can't learn how to invest in publicly held stocks. So I'm going to go back really quickly and show you how to Google this. So I'm going to go to Google here, and let me make it bigger so you can see it. I'm going to go ahead and put in, I don't know what that discussion post told you to put, but I'm going to put most recent 10K for, I'm going to do Starbucks. Okay, and it'll come back. You can usually find an SEC link. There are lots of them here. I'll go pick this one. And this is actually Starbucks site. They have an annual report here, so I'll just go open it. If you're given an SEC site, you'll want to go look for item 8. So this is an annual report. It doesn't look like this is it is a 10K, a formal 10K. So when I look at the table of contents, it's going to tell me where item 8 is. Item 8 is right here, financial statements. So I'm going to click on that item 8. And within a few seconds, you have a set of SEC documents in your hand that you'll be using throughout your college career. This is an income statement that you see up here right now. Our post deals with a balance sheet. So I'm going to go scroll down. I'm looking for the balance sheet and let my computer catch up with me. There's the balance sheet. So you're going to be answering questions about this balance sheet. Now notice up here it says in millions. Okay, these are not in absolute dollars. These are in millions. So if it asks you how much is Starbucks total assets, you can put in millions, just like the report itself does, and you can list this number. This happens to be $29 billion in assets that Starbucks has in the company. And you'll scroll down further and you'll list their liabilities. Okay, and you'll look for a line that says total liabilities. There it is. 37 million. That's an right? Starbucks has more liabilities right now than it has assets. And then you'll put in the negative equity. And then you'll do that. I believe the discussion post will also ask you for a competitor. So you have to decide what's a competitor of Starbucks. Some people will say McDonald's or Wendy's, and that's fine. Some people might get more specific and say maybe Peet's Coffee, if Peet's Coffee is a publicly held company. So you and I are going to learn from each other. I think it's very eye-opening to see companies that we go to, that we frequent, that maybe we shop at, and to take a look at real life numbers as we work through these classroom exercises. It gives you a bigger perspective on what's out there. Any questions on that discussion post? No questions? Okay. Then let's go ahead and take a look at our handout for today. We are focusing on chapter 4. There's, I'd say, 3 major topics in chapter 4. And again, I know we're in a really fast-paced classroom environment, but you still have to do your best to be prepared. So ideally, coming into class today, you should have read chapter 4. Hopefully you're thinking about outlining the chapter as you read it. That creates a really good study document for the exam. And you've read the chapter, and now when you come into class, this is the second or third time you've seen it, instead of just walking into the classroom cold, not even knowing what the title of chapter 4 is. And if you're not doing that, I want to encourage you to start creating these good study habits, because when you get into the transferable level classes, 101 and 102, you will be completely lost if you walk into the classroom without having read the chapter, because the instructor is going to jump in and just start doing exercises and problems. In fact, some instructors will make you take a quiz before you ever come into the classroom. So we want to start working on developing those study habits now. I have been a student for a very long time. I feel like I've gotten really good at studying for exams. I have office hours right before this class. They're not physical offices. There are very few people on campus right now. They're Zoom offices. And if you want to come into the Zoom room and have a one-on-one discussion about how to study, I'm in my office every day for an hour before class. I think I have to do 3 office hours in a semester, 3. Well, I don't care if I get paid or not. I'm in that office every day before class. So what I mean is I need to do 3 office hours in total over the whole semester. Okay, I've more than done that. I'm not in this for the money right now. I'm in this to help you guys survive a very fast-paced accounting class. So come into those office hours if you're struggling. Just on the home page here, which let me get back to this home page so you guys know where exactly it is. Not the first time we've talked about this. On this home page right here, there is a red button that says Office. If you click on that, you will just all of a sudden appear in my office between the hours of 8 and 9 is when I'm in there every morning. So if you're interested in learning how to study, maybe nobody's ever taught you good study habits, that's a great topic to come in and discuss. So back to this handout. Today, we're going to transition. We're still talking about rules of debits and credits. That's why it's very important that you've mastered those by now. If you haven't, you cannot move on. You have to go back and do some more work in chapter 3. For those of you that did not do the chapter 3 homework, you got to go back and practice prior to learning about chapter 4. So a reminder, the ability to record transactions using proper debits and credits is the main foundation of this course. And everything we do in here, and I mean everything, rests on your ability to use the basic rules of debits and credits. So that's just a warning for anyone that may have tried to shortcut it. Maybe you didn't realize how fast summer classes went. Maybe you didn't get a chance to do the chapter 3 homework because you work a lot of hours. I get it. But we cannot go forward until we master that. It would be like this. I have a 1-year-old grandson, right? It would be like getting my grandson and saying, here, go run, right? And just push him off and say, here, go run. Well, if he hasn't learned how to walk, then he will never learn how to run. So you got to go back and master the basics before you do something more complicated. And that's what I'm trying to get across to you as far as chapters 2 and 3. So assuming you've mastered the chapters, today we're going to talk about the general journal. Let me tell you a little bit about what it is, and then we'll jump in and get our hands dirty, because again, my style is a lot of hands-on practice to keep doing it repetitively. Then you guys go home and practice it, and that's when you should be coming into my office or Giselle's Zoom hours and asking questions if you get stuck. So it is called the Book of Original Entry. And what that means is that it's the first place a transaction gets recorded. And what I call it is an economic diary, right? So think back to, you might have been maybe junior high. I remember my English teacher made us keep some diaries. They had us write down what happened to us over the course of a week. And then I think she graded it for vocabulary and grammar. Some teenagers keep diaries. And what they do in the diary is they list things that happened to them today, maybe boys or girls that they're dreaming about, maybe, you know, clothes that are in style. Let's make sure we mute ourselves, please, because I hear a lot of background noise. I'm going to mute one person. You guys can always unmute yourself if you have a question. But a diary is basically a list of what happened to you. In accounting, the general journal is an economic diary. It's a list of all the financial transactions that happen to a company over its life. So I want you to think about a journal as a historical document. It's the first place a transaction gets recorded, and we keep this economic diary to document financially what happened to a company. So we're going to go through some steps for journalizing. You guys all have access to these handouts in the modules link. So I'm going to go through these bullet points, but I think what's really going to be helpful for us is if we just jump in and we try these. So let's go over the formal rules, and then we'll go get our hands dirty and we'll start working on the first problem. So steps for journalizing: because you are beginners, think about the transactions in terms of T accounts, right? So what's going to happen is the same exact transactions that we've been dealing with now for 3 chapters are going to come up again in chapter 4, but we're going to change the documents that we use to record these things on. So decide what accounts are affected. That'll sound familiar to you. That's the mental mechanics that we've been doing so far. Then decide whether the accounts are increasing or decreasing. Then decide whether debits and credits, what's being debited, what's being credited, using those rules from chapter 3. That's what I mean about foundational learning. We can't go on to chapter 4 until we got the chapter 3 rules down. We're going to date every entry. And then here's something new. I think Brandy brought this up. And when we were using T accounts, we didn't care what order the T accounts were in. We didn't care if the owner was investing cash, for example, that first transaction that starts all of our problems off. We didn't care whether you listed cash first or you listed capital first, as long as you got the transaction on the correct side. Okay, now we care. Now that we're using formal accounting documents, we want to list the debits first. Then we want to list the credits after we indent a little bit. And then we want to put a brief description about what's happening in that transaction, remembering that this is a historical document. So you're going to include any type of source documents. And when I say source documents, I mean if there's an invoice related to the transaction, maybe we got a phone bill, we would put maybe an invoice number, or we might put something like June's phone bill, or we might put payment to T-Mobile for June. If I asked everyone to put a description down in here, I'd probably get 7 or 8 different answers. That's why Connect will not ask you to put the brief explanation in. It has no way of verifying that it is correct. But even though Connect is not going to ask you to do this, I'm more concerned about the bigger picture. Know that every journal entry that we place in the journal needs to have a description with a reference to a source document. It could be an invoice number, it could be a check number. If you're making payments online, it could be a confirmation number, something that the auditors can go back to and pull the paperwork to say, oh yes, this makes sense. So we are going to learn right now how to journalize. So to sum it up in a couple sentences, every single company in the whole world uses some type of a journal, whether it's manually or probably 99% of the time it's going to be electronically, but there is still a journal in the system. It's the first place a transaction gets recorded. It is a historical document. It's in chronological order. That means date order. And we're going to jump in and try these to demonstrate how journal entries are done. So let me stop for a second, give you guys a chance to ask any questions you may have. Just unmute yourself. or you can use the chat room that Giselle's keeping track of for me. All right, let's go jump in and try one. So what I want on your screen is the Excel files. You should have downloaded them by now. These are located in the modules link, and you can either use these on a computer or you could handwrite your notes out. Doesn't matter to me how you do it, but I'm going to demonstrate to you how to journalize. So here's this first document. I'm going to circle it. It's called the General Journal. It is a historical economic diary. So we just mentioned that in the notes. It is a historical economic diary. So just like a kid would keep a diary of what happened to him or her during their lifetime, usually in the teenage years, this document keeps a financial record of everything that happened financially of any company. And so we start off by being introduced to this chart of accounts. It's not the first time we've seen it. A chart of accounts is a list of all the accounts a company uses. It is a live document, which means it keeps expanding as the company gets bigger. You keep adding more accounts. And the first thing I want to point out to you is a numbering system. All companies use different numbering systems, but no matter how many numbers are in the accounts, it just represents a general overall numbering system in that all assets are going to be in the 100 series. So you'll notice here that from here up, those are all asset accounts. All liabilities are going to be in the 200 series. All equity accounts are going to be in the 300 series. The revenue accounts are in the 400 series, and the expense accounts are in the 500 series. Now, those numbers are not going to become too important as we journalize, but they are going to become very important when we go through the second step, which is posting. So right now the numbers are provided. You can kind of ignore them right now. I just wanted to give you the rationale for why they're numbered as they are. But what we're going to focus on right now is we're going to focus on journalizing the transactions. So the first one down here, and by the way, this is exercise 4-2 in your book. If you wanted to turn to it, you can do that. I don't know if this is too small for you guys to read on the computer. Let me get the page number in your book. And Giselle, if you find it before I do, you can holler. Here it is. Exercise 4-2 is on page 110 and 111 of your ebook or your textbook. So what I've done on all of these exercises is I've gone in and I've clipped or copied the exercise onto an Excel document so that we can demonstrate, so that I can demonstrate it to you during class. So September 1st, it says, I'm going to make this a little bit bigger. It says Marcus Martin invested $40,000 in cash to start the firm. Okay, we're going to go through the same mental mechanics that we've been using now for the past 2 chapters. We want to identify the 2 accounts. So we're pretty good at this by now. When the owner starts up the company, he has cash coming in and his capital account goes up also. So step 1 is the same steps that we've been doing now for 2 chapters. Identify the accounts affected. We know that for double entry accounting, at a minimum, 2 accounts are affected. In this case, the company's cash account is affected and the owner's capital account is affected. So the next step would be the same as chapter 2. Figure out what the account looks like as far as those 5 rules of debits and credits. Assets look like this, and equity accounts are the opposite because they fall on the other side of the accounting equation. And so when the owner puts money into the firm, cash is going to go up with a debit and capital is going to go up with a credit, as you see me chicken scratching this out in T account form. That's chapter 3 right there. We really haven't done anything new yet. Here comes the new part. T accounts are ugly, they're tedious, and they take up a lot of space. So in the real world, in accounting, we have this thing called a journal. And I put that out to the right of the screen so that you guys could see it. work on it with me. So again, we mentioned this in the lecture. I'm going to write it in your notes also. This is known as the book of an original entry. We said it's the first place a transaction gets recorded. And I call this an economic diary. So you can fit that in someplace. I think I'm going to insert a new line just so that you guys understand that this is an economic diary. In other words, it's a list of everything that happened to the company financially. And our job now is to find a way to transition those T accounts into this journal. Okay, well, if you go back to that handout, the first rule of journalizing was to drop in the date. So here's the year, 2000X1. That goes at the very top. And now this first transaction was September 1st, I believe. I'll go check that. But September 1st. And Chris, did I see that you maybe had a question, or actually does anybody have a question? No? Okay. So remember, rules of journalizing said you have to list the debits first. So we need to go list those debits first. So what we debited was cash. All the debit accounts are left aligned. That means they go along this margin right here. So we list the cash account first. We come over here and drop it in the debit column. So it's going to look like that. Then we indent a little bit. Okay, I've put in columns for you to indent. If you're doing this on notebook paper, you'd come in maybe 1/2 inch or so on the indentation. And then we would list the account to be credited. If we look at our chart of accounts, the owner's name is Marcus Martin. And this is capital. And we drop the credit in. Okay, so we have our debit. We have our credit. And then you indent a little bit more and you put a brief description about what transpired in that transaction. So if there was a check number coming in, or if there was a money order or some type of a document, you would list that and include it in the description. And again, Canvas, or I should say Connect, will not ask you for this because it has no way to verify that you're correct. Using Connect is very short term. It's in an academic environment. So I want us to get in the habit, as we're doing our homework, try it first on a piece of paper, get in the habit of writing that description so that when you get in your 101 or your 102 classes, or you move on in your accounting classes, you will have formed these good habits for journalizing. So I'm going to put initial investment of the owner. Okay, everything's lined up. All the debits are going to be left aligned. All the credits are, if I had them, I could draw this line going all the way down where the credits would be. And all the descriptions are going to be in that third column. And what we've just done is we've journalized our first transaction. And then you would skip a line between entries and you'd be ready to go do your second one. So the T account rules, the rules of debits and credits, those are still extremely relevant. We're now carrying them over to a real life document that all companies use. This is the first place a transaction gets recorded. So let me stop. Any questions about that first journal entry? Since this is a brand new company, I'm going to put a 1 up here on the page number. You can type it in. I just wrote mine in. This is page 1. That'll come in handy when I show you how to post. So let's go through and review our rules of debits and credits. We're going to journalize, I don't know how many transactions, 10 to 12 transactions. We're going to journalize them together because it never hurts to practice the rules of debits and credits. And then we'll move on and we'll show you how to post to that second document called the general ledger. So again, I want to stop, get any questions that you guys are wondering about on that first one before we move on. Okay, not hearing any questions. Giselle, nothing's in the chat room. Okay, next one, purchased office equipment on credit. Okay, so again, think about Same mental mechanics. Think about the 2 accounts involved in this one. We're buying office equipment, so that's going to be 1 account. And we're buying it on credit. That means I'm going into debt. That means I'm going to use accounts payable. So in your mind, you might even have to write these down. You're using office equipment and accounts payable. How do I know it's accounts payable? It says that it's due in 30 days. And they gave us some source information. They said, we have this invoice, so that's going to be part of my description, and it's due in 30 days. That's also going to be part of my description. Remember what we're doing. We're keeping a historical economic diary of all the transactions that happen to a business. So by now, we should know that the office equipment account is going to be increased with a debit, and the debt account, accounts payable, is going to be increased with the credit. So if you need to write that out, that's perfectly fine. I'm kind of running out of space, so I'll come over here and write it down. I need whatever account they give their equipment and accounts payable. I'm going to remember that assets look like this and liabilities look like this. And I'm going to go put that number on the appropriate side. So if you have to do T accounts for the first few transactions, that's totally fine. That's what I would do. And now we're going to transition that over to this formal journal. And because there's lots of ways and lots of accounts called equipment, let me go look at their chart of accounts. And you'll see that they have 1 regular old equipment account. So that's what I'm using. I'm not calling it office equipment. I'm using the chart of accounts that they gave me. They just call this equipment. So I come over here to my document called the General Journal. I'm going to drop my date in. Since it hasn't changed, I don't have to write September in. It wouldn't hurt if you wanted to write September in. I'm going to list my debit. I'm going to line it up, left align it. I'm going to put equipment in there. I'll go put the amount in the debit column, $43.50. Then I will indent a bit, and I'll go list my credit account, which is accounts payable. I'll go drop my credit in the credit column for $43.50. And then this is a requirement, even though you won't see it in Connect. In the world, you would write down a description, and Philip's description and Ulysses' description and Giselle's description is going to be different from mine. They're all different. That's why Connect has no way of checking you. That's why they don't ask you to do it. But I'm going to put that I bought my equipment from Zappo. I'm going to put any kind of document number, like an invoice number. And I'm also going to put when it's due. So due in 30 days. And again, I want you to notice all the debits are left aligned. All the credits, you could literally draw a straight line. They would all be lined up. And all the descriptions would also be lined up. We're keeping a neat and orderly document called a journal. Any questions?
I have a question.
Yes.
Is there a maximum or a minimum amount of lines that you should use per an entry?
That's a great question. So minimum, I think that was Brandy's voice I heard. Minimum, there's going to be at least 3 lines, right? 1 line for the debit, 1 line for the credit, and then at least 1 line for the description. Now, some of you may use 4 or 5 lines on that description, depending on how much you want to write. But at a minimum, I would say 3 lines. At a maximum, I don't think there's a maximum. If you had a really complicated transaction and you were trying to leave a good note to the auditors, let's say, about why you were doing this transaction, you could use up the whole page. So that's a really good question. I hope I answered that. Any other questions? Okay, remember what we're doing. This process, I guarantee you this is a term on the next exam. What we're doing right now is called journalizing. It is the first step in what's called the accounting cycle. It's actually the second step. First, you analyze. Okay, that's what we've been doing for several chapters. Then you journalize, right? We're keeping an economic diary a really good record of what happened so that anyone that needs to look at our books, and by the way, all these companies that you're going to be looking up in your discussion post, they all have to undergo an annual audit, at least annually. And so there will be people coming in to check their books, testing transactions to make sure that their books are fairly represented. So next one, let's go try the next one. Purchased an auto that will be used to visit clients, issued a check for $28,000. Okay, so again, mental mechanics. Think about the two accounts. Auto is an asset, so let's go look at their assets and see what the best choice is. Here's their assets. It looks like automobile, right? They may have called it car. That's why I was taking a look. They called it automobile. That would be our debit. And since they wrote a check for $28,000, cash would be my credit. So they're buying an automobile. Visualize the two accounts. An asset, this one called automobile. The second asset is cash. One asset's going up. The automobile, now we own something of value that a company owns. Automobile's going up. Cash is going down. I need to document that in my journal. So we're going to journalize. Drop in the date. Again, you notice we skipped a line between entries. The rules of journalizing says you need to list the debit first. So this is automobile, if I can spell it correctly. Automobile. Drop in that debit of $28,000. Indent a little bit. Put the credit in. The credit was to cash because we wrote a check for it. Let me go get that amount in correctly. I missed a zero. Fix that. Brief description. Brandy's might be different than mine. So I'm going to put purchased auto, and I definitely want to get that source document, that check number 1001. That's important. If an auditor wants to come in and say, did you really spend $28,000 on a car? They can go pull that check, and attached to that check will be the invoice for the car and any other supporting documentation. Again, we're keeping an economic diary of transactions that occurred, and we are journalizing right now. Any other questions on the first three entries that we've done? Okay. Purchase supplies for $550, paid immediately. Okay, what's going on in that transaction? Supplies is an asset. It's going to go up. So I'm going to debit supplies. And since I paid immediately, I wrote a check, cash is going to go down. So I'm going to go record that. I'm going to skip a line between entries, put the date in, list my debit, supplies is going up. Then indent a little bit, drop in the credit. In this case, since they were paying immediately, we know that cash is being credited for $550. Brief description. It's kind of obvious what happened, but purchase supplies, and let me get the check number in there. So here's what I would expect to see. If we were in a traditional classroom and you guys were doing this on paper, I would pick up your papers and I would expect to see every check accounted for with no blanks in here. So 101, 102, 103, 104, I should see them all. And if you guys were in a traditional classroom, we would go to next door to the computer room, and I would have you doing this on QuickBooks, right? Which is another electronic program which helps keep the books for small to medium-based businesses. And the QuickBooks screen would look very similar to this. The only difference on the QuickBooks screen is this description would be going in a different location. And by the way, I would encourage you guys to think about taking a QuickBooks class. It's a great way to get into an entry-level accounting position. It's only 9 weeks long in a regular semester class. They may have a 3 weeks QuickBooks class in the summer, I'm not sure. But that's kind of the way I put myself through college. It wasn't called QuickBooks at the time. It was something else called DAC Easy. But I learned how to use a general ledger software program that kept the books for a small business. And I think at the time, I think I billed myself out at $30 an hour way back when, 25, 30 years ago. That was pretty decent money. I could do the work at home and I could solicit businesses, and worked my way through school that way. So I encourage you guys to think about that. By the way, if you're interested, the class is Accounting 60, 60, Accounting 60. You could go look that up if you're interested. All right, next one, returned damaged supplies. Okay, so maybe they bought some notebooks that I know I bought 3-ring binders before and the 3-ring thing wouldn't open properly. I had to take some back. So think about what happened. We just purchased supplies for cash and now we're taking some of it back. That means if you paid cash for it, they're going to give you a cash refund. So think about what's going on. Your cash just went up because they gave you a cash refund, and your supplies went down because you returned some of them. Okay, so I have to list my debit first. Let me drop in the date. This is the 23rd. Cash went up with the debit, and my supplies went down with the credit. I believe they said it was 105, so let me drop that in. Brief description, returned damaged supplies for cash refund. And if they gave you some type of a document number, you could put that in there. Let's do a couple more to make sure that we have the hang of journalizing. But again, I always want to give you guys the opportunity to ask questions. That's why you come to a live lecture. That's why I hold live lectures. I don't want to be talking to myself to a blank video screen. I do it in other classes, but I much prefer getting live questions because you guys are representing a whole lot of other people out there that can't come to class. Okay, let's keep going. We have 5 transactions that happened on the last day of the month. So all of these are going to be listed on the 30th because I think it's really important that we practice these transactions because the class goes really fast. I'm going to go ahead and take the time to journalize these last 5. Why don't I give us like 5 minutes or so? I'm going to set my timer. You guys try doing these last 5 transactions, just journalizing them, and then we'll compare answers. We'll mark anything that either one of us miss, and then we'll go to the harder step, which is going to be posting these to the ledger. So I'm going to set my timer for 5 minutes. That should be enough to do those transactions. You guys do them. I'm going to mute myself. Just be aware that I'm still listening, even though I'm muted. If anybody has a question, just speak up during the 5-minute timeout, I'll call it, and Giselle or I will definitely answer you back. So what I want you to do is on the screen or on a piece of paper, let's journalize those last, I guess there's 5 transactions on the 30th. I'll be doing them with you, but I'm going to keep myself quiet.
Hello, Professor Johnson.
Hi, Ulysses.
What does the P/R mean?
P/R stands for post reference, and it's going to be used when I show you how to post. So once we've journalized these, we're going to post and we're going to use the account number to put in the post reference column. So I'm going to hold that question off for just a couple minutes, and when I show you how to post, that will come up.
Okay, thank you.
You're welcome. Okay, my timer went off. I'm not sure if you guys had enough time to do that because you're still learning. I'm going to give you another minute to look at my answers, trying to fit them all on there. There's the last four. Check and see if you got them all right. And remember that Giselle is posting her files in the discussion area. So anyone that may have missed the last few or you need a few minutes, that's absolutely no problem. She's posting hers so that you can go check yourself later. So what we just finished, we journalized. We kept a historical diary, historical economic diary of transactions that happened. The journal entry is a great document for historical purposes, but it has one major downfall. And the major downfall, and some of you may have picked this up, is what's in my cash account right now, right? That's pretty important to me. It's very important for me to know how much is in my cash account at all times because I need to know whether I can buy groceries, whether I have enough money to pay the rent, or so on and so forth. So the downfall to this journal is there are no balances. It keeps a great historical record of what happened, but it is not tracking the balances. I don't know how much cash I have right now. So we're going to address that next, and I'll answer Ulysses' question on that PR, that post-reference column as well. So before we move on to the posting process, which is tedious, by the way, and it can kind of be a pain in the butt, to be honest with you, before we move on to that, any questions about the journalizing process?
Yes, Professor.
Yes.
Can you show the first
Yes.
one, the 30?
Yeah.
Thank you.
Here we go. The first one on the 30th is right there. It was a debit to accounts payable and a credit to cash.
Professor, I don't know if you have the correct amounts of dollars for some of these.
Okay, let's check the book because there is sometimes where they change them. Which one do you think, Ian? Which date? On the 30th?
Yes, a couple on the 30th. I was kind of confused from looking.
Okay. I am using an answer solution. So let me go and check this against the book. I'm glad you brought that up. So it's the 30th. 4-2 is what we're doing here. Let me go check these out. I'm glad you asked. Okay, issued a check for 2,100. So that one looks correct based on the problem I'm reading. Then on the 30th, the drawing was 3,000. I think that one's right. The rent was 4,500. I think that one's right. Perform services for cash. I think that one's right. And the telephone bill. Which one do you see, Ian, that has a different amount?
Oh, okay. I think I was confused because I was going based off of the transactions on the left.
Well, that's what
that
we
we
should
just
be
did.
going on. Let's
Not different.
yeah, let me make sure. Let me make sure
Because
we're
I was
doing.
first confused by the withdraw $3,000, but it said to withdraw 1,500 for personal expenses.
Oh, okay. Now I see what you see. It looks like this does not match the book. Yeah, that would definitely be an issue. So I'm looking at the textbook. I see here now what you're talking about. So the 3,000 drawing. Okay, I see that matches. Which one is it? The issued check for 4,500.
The one below it is doesn't match the one on the top. That's the one I followed. The one on the bottom. That's why I was also confused.
Oh, I see what you're saying. So this doesn't match this. Is that what you're saying?
Yes.
Okay. I see now. So let's do this. Let's get rid of this one because I'm not sure what that is. It looks like it may have come from a different version. Let's go adjust the work to match this first set here because that's what I was using. Now I see exactly what you guys are talking about. So I'm going to put this back up here. Let's get us all on the same page as far as the numbers go. There's nothing you did wrong. It looked like there was a different version on that second part. I didn't even realize that was there. So I'm going to wait for a minute. Let's go ahead and let's all get our numbers matching the first set of data that was up there. And then we'll proceed on. What's important is that you guys are getting the accounts right. The numbers were different, but that looks like a mistake on my part, or the author changed the wording or something. I'm not sure whose fault that was, but it doesn't matter. Let's just get it correct. Good question, Ian. Thanks for asking. A lot of people would have been wondering at home what the heck happened. The important thing is that we know how to journalize no matter what number is given to us. And now the more challenging part, I think, is going to be the posting process. So let's make sure that we have those transactions on the 30th. We're all on the same page. If you need to see any part of it, let me know. And then Ulysses, did you have a question?
Yes. Are we going to sum up the debits and credits separately?
You don't have to do that, but I have seen people in high school do that as one other check on their data. So what Ulysses just suggested is, and it may come from another class that you've taken, he was suggesting that we summarize up the debits and credits to make sure they match. So we don't have to do that. We're going to, in the ledger, we're going to go through a mathematical process that's going to keep track of the balances at all times. But to answer your question, Ulysses, there's no problem in doing that. Here's how you would do it if you wanted to do it. Not required, not necessary, but you would sum up both of these columns, right, from the top to the bottom. I'm going to use equal sum and let Excel do it for me. And that would give you extra assurance that your debits equaled your credits, especially for someone like me that has a mild case of dyslexia where I transpose a lot of numbers. That may be a good step. It's a meaningless total. The only thing you care about is that they match. So it's a good question, not required, but definitely can't hurt either.
Thank you.
Yes. Anybody else? Good questions. Ian.
So for if you went out of order, let's say if I did the issue check 1004 first, and then I did the withdraw $3,000, would that be wrong?
No, as long as you have it on the correct date, these could be mismatched, right? I could put this telephone expense one up here. As long as it makes it in the journal, you're okay.
Okay, thank you.
Anybody else? Okay, so let's do the second part of this. The challenge is, great, we know how to journalize. We know it's a historical document. We understand the significance of it. We know that it's meant to leave a trail for future people that come behind us. But we also said the big downfall, there's no totals. I want to know what my cash is. And so the second thing I'm going to teach you is how to post from this journal to another set of books called the ledger. So if we go to the next tab, let's take a look at what a ledger looks like. You'll notice that there is a ledger account for every single account in the chart of accounts. And the full purpose of this ledger is to track the balances. So the purpose of the general ledger, that's what this is to track the cumulative balances. And this is where that PR that Ulysses asked me about earlier, this is where that post reference is going to come into play. So I'm going to go back to the handout for a second. We'll spend a little bit of time talking about what the ledger is and why we need it. And then we'll take those journal entries from 4-2 and we'll post them to the ledger here. So let me take a second to go back to the handout. Let's talk about what that ledger is and why we need it. And then we'll go practice. And again, the very best part about accounting, I think, is getting your hands dirty and spending the time practicing and making mistakes and going back and then relearning how to do it. So the ledger, the general journal is a great diary, but it does not track the cumulative balances. So here's some facts about the ledger. The ledger is a book that contains the detailed transactions of all the accounts. The primary purpose is to track account balances. So at any point in time, if I want to know how much cash do I have, I should be able to turn to the ledger and see how much cash I have. If I wanted to know how much debt am I in, I would be able to flip over to accounts payable and loans payable and any other payables and to see how much debt I'm in. So let's keep reading. Accounts are organized in chart of account order. Okay, that means all the assets are going to be listed first in the 100 series, and then all the liabilities in the 200 series and so forth. The ledger has to be flexible enough to allow for the addition of new accounts. Here's an example. Maybe my business goes out tomorrow and that business is so good that I need a delivery truck, right? And I don't have an account that says delivery truck. It needs to be flexible enough to allow for new accounts to be created. So it's a live document. And how you get the information from the journal to the ledger, that's the little bit confusing part. It's called the posting process. And so posting means getting amounts from the journal, which we have the journal now, to the ledger. Again, I'm going to go through the steps in bullets here. But more importantly, we're going to jump in and get our hands dirty so you guys can see how this works. So here's what you do in words, then we'll go in and do it in action. From the journal, the following information is posted. We're going to carry over the date. We're going to carry over the debit and credit amounts to each account. And then we're going to cross-reference. That means in the ledger, we're going to put the page number of the journal where that came from. And of course, the hardest part of this is keeping track of the cumulative balances because that's the whole reason why we do this. Okay, so that sounds confusing. We're just going to jump in and try it because I think that's going to clear it up a lot once we jump in and try it. So we're going to at least do the first 4 transactions together. So let's go look at our journal here and let's go do the first transaction. So first transaction, here's what we're going to carry over. The date. We're going to go debit the cash account and we're going to go credit the capital account. And after every entry, we're going to keep a cumulative balance in the ledger. Okay, so let's go find the cash account in exercise 4-3. Drop the date in. Okay, so this was September 1st, I believe. Let me pull up something else so I don't have to keep flipping back on you. September 1st. If you want, you can put the year up at the top. It's up to you. And then you wouldn't have to write that down again. So 2000 X1, I think, is the year they use. will drop in September 1st. Okay, now remember, we debited cash for 40,000. At all times, we're going to keep track of the balances. So how much cash do we have right now? We have 40,000. And if you guys want these numbers to display so that they're easier to read, let me fix that for you. You can do it with me if you want, or just leave it like it is. So I'm going to highlight up in the gray area. All those columns are going to have numbers in it. I'm going to press this comma button up here so that you can see a different format. And because we don't need decimal places in this problem, I'm going to get rid of those decimal places. If you don't want to do that, don't worry about it. I just want the numbers to be easier for you to read. Here's where the cross-reference comes in, the post-reference, which Ulysses asked about earlier. On the ledger over here, you put in J for journal and what page number that transaction came from. That came from the journal, page 1. And then back in the journal, we're going to put this account number. So he asked, what's that PR for? Back over on the journal, I'm going to put account 101. So it's going to look like this. That means I have posted that line of that transaction over to the journal. Where did it go? It went to account 101. And now I'm going to go do the same thing with that credit of 40,000. So I'm going to go back over here. I'm going to scroll down to the equity accounts, which are always in the 300 series. I'm looking for capital. I'm going to drop my date in. And again, let's not worry about the year right now. Drop my date in September 1st. Oops, I'm in the wrong account. I need to go to capital, not drawing. Let me go up here one more. I make mistakes too, and I'll never be afraid to admit that. My amount was 40,000. And then over here, I now have a credit balance. Our goal is to track the accounts, the balance after every single transaction, so that we can flip to the ledger and find out the balance in any account. Now we need to cross-reference. This came from the journal, page 1, so it gets a post-reference of J1. And this number here, 301, is going to go back onto the journal here. Okay, now we know if I were to go to Starbucks and come back and wonder, where in the heck did I leave off? I'll know that I left off here because only these first two have account numbers in. So we're going to go back and do these for a couple, at least the first 4, maybe the first 5. So you can see how we're going to be keeping track of those balances. So let me stop for a second because I know you must have questions. Let me hear those questions and then we'll keep posting.
Where did you go right now? For the capital.
So where I went, capitals and equity account, it's going to be in the 300 series. So I went over here and I scrolled down, right? This starts with all the assets. I'm going to keep on going. And then I'm looking, now I'm to my liabilities. I'm looking for that capital account. So here it is. It's on around line 72, unless you change the numbers. Do you see it?
Yes.
Okay. Any other questions before we go do that second one?
Just to clarify, the post-ref means it just refers to the transaction number.
So it refers to the journal number that the entry is on. So in this post-reference column, we're using journal page numbers. On the journal, in the post-reference column on the journal, we're putting account numbers in.
Okay, so so all of those transactions on the general ledger would be J1? Or?
Yes, every single one of them needs to have either an account number. Once we post it, some people make the mistake when they journalize, Justin. They'll go ahead and just put the account number in as they're journalizing. We don't want to do that because if we get up to go run an errand, go down to get the mail or something, we come back, we don't know where we left off recording these. And so right now, I know I left off here because these don't have an entry number, an account number.
Okay, thank you.
Yes, any other questions? Okay,
This is called
go ahead.
this is called J1 because we only have one journal, correct?
We're on page 1 of the journal. So
Okay.
if we would have gone over and used this second page on a longer problem, gone down and used the second page, it would be J2, J3, J4, and so forth. This is our first page of the journal, and we only used one page. Good question.
So for the reference numbers, these numbers aren't universal, correct? Like for 101 or like the 111?
So the 100 series for all the assets is universal. All assets will be in the 100 series, but Ian, your cash account might be 101, mine might be 111, another company's might be 121, but all of them are all the assets are going to be in the 100 series.
Okay.
Yeah.
I
Thank
have a
you.
question.
Sure.
I have a question, Professor. So if you wanted to add another account in the 100 series, you just pick a number and add that account?
Yep. So if that delivery truck, for example, I'd go look at this chart of accounts. I know that I've used up in assets through 141. So my delivery truck might be 145 or 150. You just leave some space so that you have the ability to go in between those numbers and add numbers in if you need them.
And there's no set way you can just pick a number? Or does the company say we want everything to be even?
No, you can just pick a random number, but again, leave space between. Like, for example, there's 10 spaces between cash and accounts receivable. That's because there's some other really liquid assets. Remember, assets are listed in the order of liquidity. Like if I went out and bought some stock, that's really liquid. I could turn that into cash within a few seconds. So marketable securities, for example, would be really close to cash. It might be 102 or 103. Right? And a copier, if I go buy a copier, that's not real liquid. It's kind of hard to sell a copier. So it's going to be down near the equipment. Maybe it's 150 or 160, but leave space between the numbers. Be flexible.
Okay. Thank you.
Yes. Good questions. Anybody else? Okay, let's go post the second one then. So let's go find equipment. Remember, that's going to be in the asset series. So it's going to be toward the top. Let's go find equipment and debit it for 4350. So I'm coming back over here. I'm going back to the asset category. Here is my equipment. For some reason, let's see, Excel, let me hit escape. Excel has kind of frozen up on me. I don't need that to happen. Let me try getting out. Very strange. Let me click off, click on. There we go. I don't know what was keeping that from going. So here we go with our auto. I think that was our second one. I got distracted there by the little technical glitch. I'm gonna have to go look again. Equipment and accounts payable. So equipment is going to go up. So let me drop in my date. We have September. So much easier when you have two screens. September 4th, I think that was. The amount was a debit of 4350. We're keeping running tabs. Right now there's 4350 in there. And that came from the journal page 1. I'm going to go back over to that journal and put in account number 141 to show that I've posted, to show that I've updated the balance. So back over to here, enter in the account 141 for equipment. And now I'm looking for accounts payable. I know that's going to be in the 200 series because it's a liability. So I'm down, here's accounts payable, drop in my date, drop in my amount. It is a credit. Okay, you're looking on the journal. We credited accounts payable, and it now has a credit balance of 4350. I'm going to reference, I'm going to cross-reference. This came from the journal, page 1. And back over on the journal, I'm going to put that account number in 202. So back over to here, I'm going to put 202. Now you're going to start to see balances change when we get to this cash number down here. So let me stop. We've done 2 transactions. That means you have a total of 4 postings because each one had 2 accounts that we used. You will make mistakes on the homework. This is a place where there will be mistakes. I don't want you guys pulling hair out. I don't want you spending 2 hours trying to find your mistake. I want you to contact me if you get stuck and say, I just can't find my mistake. I'm out of balance. I don't know why. Tell me what question you're working on and I'll email you back and help you. So let's go do our 3rd transaction. And this is where you really got to pay attention because you're going to see some account balances start to change. So let's go record this 3rd transaction unless I hear a question. Okay, let's go find the automobile account. That's going to be up with the assets. So I'm going up here to my automobile account. I'm putting in my date, which was September 16th. That was a debit of 28,000. This is an asset. I'm going to carry over my balance of 28,000. I'm going to reference this. This came from the journal page 1. And then I'm going to take that account number 139 in this book. It will be another account number on another problem, but it's going to be in the 100 series. And let me go drop that in as a post reference 139. Now, if you've tuned me out, you need to tune me back in when we do this credit here, because now we're going to change our cash balance. So this credit to cash of 28,000, remember cash is our first account. So we're going to scroll all the way up to the top. We're going to drop in our date here. And I'm trying to refresh my memory on what that date was. I believe it was the 16th. We had a credit of 28,000. I hope you guys are paying attention. It's almost as if you think about this as a big T account. So what we need to do, and the challenging part here, is did that pull our balance up or down? Well, this is what assets look like. Going back to those rules of debits and credits, that 28,000 pulled my cash balance down. So I don't have 40,000 anymore. I have on my calculator 40,000 minus 28,000. Maybe you can do that in your head. I have 12,000. That's the whole purpose of this ledger, is to track the balances. So at any point in time, I can open up these books and see an economic diary when I look at the journal and a list of account balances when I look at the ledger. So I'm going to reference this J1, but is there anyone that is struggling with how did I get that 12,000? Yes.
How did you get that 12,000?
So the way that I got that 12,000 is this is a credit. This 28,000 here is a credit. And for cash accounts, credits pull the balance down. So I took my starting balance of 40 and I subtracted out 28,000. So what I did, Ulysses, right here in the formula bar up here, you'll actually see my calculation. It was 40,000 less 28,000. Started with 40 and then decreased it by 48. Let me put my reference of 101 in over here. And we're going to go do a couple more to make sure that we get it. So again, if I got up and ran downstairs, got the mail, talked to my husband, whatever, when I came back and you wonder, oh my gosh, where did I leave off? You just look in this column and here's where I left off. I recorded those 2 and now I'm on this one on the 20th. So we're going to do at least one more together, possibly 2, because I want you to see how the accounts go up and down. So on the 20th, we debited supplies and we credited cash. Let's go take care of that. We're going to increase supplies. So supplies is an asset. You'll want to scroll down in the 100 series. Here's the supplies account. I am going to date this September 20th. The supplies account went up by 550. Right now, the balance is 550. I'm going to cross-reference this. This came from the journal, page 1. And then back over on the journal, I'm going to put in that account number 121. So let me go back in here, 121. And now we're going to have to be careful because we're going to adjust the balance again. The second half of that transaction, which I'm ready to do now, was a credit to cash. Okay, cash is my first account. I'm going to scroll up to it, drop in the date, drop in the amount. It is a credit. And here's where, again, you got to pay attention because it gets a little tricky. Credits to assets pull the asset balance down. So I had 12,000. Here's my calculator. 12,000 less 550. Your balance in that account should now be 11,450. How did I get that? The balance before it, 12,000, minus, because remember, credits pull assets down. So a credit to cash would have pulled my cash balance down to 11,450. Let me
Professor Johnson.
Yes.
Brandy had a question. She
Yes.
asked, are putting descriptions on the general ledger or do we leave them blank?
So good question. I believe your textbook in this chapter leaves these descriptions blank. Brandy asked a great question. She said, hey, there's all this space for a description. You know, we're not using it. We don't have to because our source documents are listed in the journal. However, Brandy, if for some reason you wanted to put some kind of notation in here, that would not hurt anything. Later on, when we talk about subsidiary ledgers, things that we don't know about yet, we can use that description. But for right now, it's totally optional. And in Connect, I don't think you'll be using the description. Good question. Okay, let me go back because I need to put in that cash number. I think I did the cash, but I'm going to go double check. A credit of 550. Yes, I did it. So I'm going to go back in and put in 101. And again, if you've tuned me out, tune me back because now cash is going to be going the other way. I want to make sure that you guys are used to the math mechanics here. So I'm ready to do the one on the 23rd, but let me stop and see. You guys have great questions. Let me see if there's any other questions. All right. The 23rd, we debited cash. That's when we'd return those damaged supplies. So I'm going to go to cash. And this time cash is going to be debited. So I'm going over back to my cash account. I'm going to drop in my date and cash was debited on this one. We took some supplies back and we got a cash refund. So be careful. This is where we track the balances. We're updating our ledger balance after every transaction. Debits make asset accounts go up. So this time we need to add in that 105. So here's the math I'm doing. 11,450 plus 105. Let's see what you guys get. I got 11,555. Okay, how did we get that? 11,450 plus 105. Debits make asset accounts, including cash, go up. So we're going to reference this. This came from the journal, page 1. And back over on that journal, I'm going to put our cash account number, 101. And now I'm going to go credit supplies, which is another asset account. This time it's going to pull my supplies down. So I'm going to go find supplies. It's in the asset series. Here it is. I'm going to drop my date in. I'm going to put that credit of 105. Be careful. Again, think about this as a big T. This is an asset account. So there's the rule that credit pulled my balance down. So I'm not going to add. I'm going to subtract 550 minus 105. And I got 445. How about you guys? Yeah.
Yeah. The date is 23rd.
Oh, thank you. Let's see. Thank you. Thank you. For 550, 105. You are right. Thank you very much for catching that. My guess is Connect probably would have caught that too. And sometimes, sometimes we do these problems and we just pull our hair out. Sometimes if we forget transactions, Connect doesn't tell you that you forget. It just says something like account not complete. And you're like, what the heck? So I'm trying to get them to put that red mark when you forget something also, but they haven't done that quite yet. Let's reference this.
So I had a question.
Yeah.
So let's say if we had another supplies, we put in and say it was for 450 on credit, then would the balance go to just 5 or would it be like -5 on credit?
Okay, good question. I think that came from Ian. What Ian asked is a really good question, and I'm going to answer it. So if I had a transaction where we had supplies decrease of 450, right? Do you see what that does? That's going to tell you that you have an error someplace because we can't have an asset with a credit balance. All assets have to have a debit balance at all times. So for all intents and purposes, when you're looking at these asset accounts, all the asset accounts, you should never, ever be using these credit balances because all assets have a debit balance. And so Ian, if you had a credit to a supplies of 450, you know you made a mistake someplace because you can't have negative supplies and you would have to go search and find the mistake.
Okay, thank you.
Yep. Any other questions? Those are all great questions. Not sure if I finished cross-referencing or cell referencing, so let me come up to 4-2, and I didn't put that supplies account in. I need to go grab it. It's 121.
Hello, Professor Johnson.
Hello.
On liabilities, we only use the credits and not the debits.
So liabilities go up with credits and down with debits. So let's go answer that one right now. Did we post this one? Yes. So I think you're asking, it's going to be answered with the next one. So let's go do one more to answer Ulysses' question. On the 30th, let's go post this. Accounts payable is a liability account. It better never have a debit balance. Debits will make it go down, but the balance always has to be, remember what the normal balance is, the side that receives the plus. The liabilities always, always, always have to have a credit balance at all times. If you have a debit balance, we made a mistake. So let's go post this last one and see if that answers Ulysses' question. Let's go post a debit to accounts payable. So let me go over here, find accounts payables in the 200 series. Okay, here it is. I'm going to date this correctly. It was dated the 30th, I think. Let me go back and look. 30th. Okay, 2100 debit. So accounts payable, September 30th. This is a 2100. I'm really glad Ulysses asked this question. So remember, this is a big T account. On the liabilities, the rule is minus plus. That's the rule. So that debit decreased our amount of debt. So it's always going to be a credit balance. Always, 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 always. So I'm going to come over here and my math is 4350 minus 2100. So I now owe debt of 2,250. You'll never use on the balance, you'll never use that debit column because all liability accounts have to have a credit balance. Hope that answered it, Ulysses.
Yes. Would that also apply for owner's equity?
Always. Yep.
Okay.
Yep.
Thank you.
Yeah. So let's put our reference in, J1. Let's go back in and put that 202 in. And let's go also, we never stop in the middle of an entry. So let me go put that credit to cash of 2100 in. So let's go back up here to my cash account, drop in the date. Cash was credited for 2100. That would bring my cash account balance down like a T account, when we credit things, that brought our balance down. So my balance is going to be 11,555 minus 2,100. Giselle, I hope you're checking, make sure I don't switch any numbers around. 94.55. That came from the journal, page 1. And back over here, we'll put in account 101. Any questions on that? So I think you guys probably have enough practice as far as demonstration goes on how to post. So let me just kind of recap where we've been. We learned today that T accounts are messy and they're not very practical for companies that have thousands of accounts, which big companies do. So instead of T accounts are learning tools. They still, to this day, help me learn debit and credit rules for complex transactions, but they're ugly and they're messy. And so we use 2 real live books today. We learned that a general journal is a book of original entry. It's the first place a transaction gets recorded. And its purpose is to keep an economic diary in chronological order, because I remember that being a test question. Chronological means in date order of what happened to a company over its economic life. The problem with the journal, it's great for keeping a diary, but it doesn't track any balances. And it's important, and I know that you guys have your own financial life. It's important to me to know how much cash I have because I may need to watch my spending if I don't have enough. So we brought into play the general ledger. The general ledger is a collection of accounts. The handout said that every single account has a general ledger card, we usually call it, for it. And the purpose of this general ledger is to track the balances. So at any given point in time, you know how much cash is in your account because you would go to the bottom. Right now, after that transaction, I have 9,455. Now I want you to think back because I want you to understand the next step. You already know how to do it. Remember when we had T accounts and we had all these debits and credits flying every which way? And at the end, we did a document that proved that the debits equal the credits. That was called a trial balance. So if we were to continue this, the last step in this would be to create a trial balance. We would list the accounts. If we were to do it right now, we'd list a cash balance of 94.55. And when we added the totals up, the debits had to equal the credits every single time. That's chapter 4. If you understood debits and credits, this is going to be a fairly easy chapter. You just got to watch the math mechanics here. If you haven't yet learned debits and credits, you're rusty, you didn't study, the class went too fast, and you just didn't have a chance to study adequately for the test, then don't go on. You have to go back and learn the rules of debits and credits because, again, it would be like telling my little grandson to go run when he hasn't even learned how to walk yet. It's impossible. So this weekend, you have one of 2 things to do. If you are confident after your first exam that you know the material, then I want you to try as much of the chapter 4 homework as you can do. I believe you could do all but 1 question right now because we haven't talked about errors. If you did not do well in the test, you don't feel comfortable with the material yet, you bombed, then you can't go on. You need to go back and practice the material from chapter 3. How do you do that? You go to the ungraded practice at the very end of Connect, pick out a couple problems from chapters 2 and 3 if you're still weak, and remedy that weakness before you move on, because you can't move on. Trust me. If you don't learn how to walk, then you will never be able to run. We just finished walking in the first 3 chapters. Now we're starting to run. We have to have the first set of skills mastered before we move on. So you guys know enough right now to do all the homework with maybe the exception of the last problem. Everything else you should be ready to do. And as I showed you at the start of class, you blink in this class and you miss out because we have another test a week from today. That means master chapter 4 over the weekend. Even though the homework's not officially due this weekend, get it done. That way, all we have left is 5 and 6 to work on next week. Who has questions?
Would you say chapter 4 is going to be the hardest chapter we should focus most of the energy, our energy on, or?
No, I would say 4 is one of the easier chapters if you understood chapter 3. I would say the hardest chapter for our next exam is going to be chapter 5. That's the reason I want you focused this weekend, find some time, set some hours aside to finish off chapter 4 so that all of our efforts next week can be focused on the hardest chapter, which is chapter 5. And that means I want it read before you come into class next time, because we really have one question left to do out of chapter 4, and it's on errors. I think I've probably challenged your brains enough today. So I think if I tried to go on and do errors, it wouldn't be fruitful. So we've covered 90% of the chapter today. You guys can go home and do 90% of the homework. If you come across a problem on errors, go ahead and leave it alone until we do the lecture on Monday. Any other questions? Okay. If not, then good job. The homework, the test scores were high for those people that did the homework. If you do have any questions, again, I'm in my office every day before class. I'm committed to you to doing that. I don't get paid for it, but I'm committed to being there because I want to see you guys succeed. So if you want to come in one-on-one during my office hours, I've been in there for the past hour prior to class starting. Go ahead and do that. I will make sure I check my emails this weekend. If you guys get stuck, don't sit there and slam your head against the wall. Ask for assistance. Giselle can also set up appointments. I don't think she has scheduled Zoom hours over the weekend, but I know she's really good at trying to work around schedules too. So between the two of us, you should be able to get whatever help you need.
I have a question.
Sure.
For the test, is it going to be open to where we could go back and see, review it?
Yes. So what happens is I had to hold it open for 24 hours because we did have a medical issue come up and I need to give that person a chance. So Brandy, 24 hours, which means tomorrow sometime, go into the report and you can click on the test and you can see not only what you missed, but you can see the correct answer also.
Okay, thank you.
Yep. So sometime tomorrow, that's a really important step. Do that because that's how we learn. I want you to learn from your mistakes and see which ones you missed. Anybody else?
I'm not too sure if this was already mentioned, but where can I find the link for the Zoom like one-on-one meeting? Because I need to talk to you about the exam yesterday.
Okay. So anyone that wants to come into my office before class, I'm going to share my screen one more time. So if you go to the home page, and I need to get there, homepage right here, there is a red office button. You're going to click on that. It's going to give you a Zoom link. So typically my office hours are before class. Justin, you and I are going to meet in there as soon as I'm done answering any leftover questions. Give me like 3 minutes to get in there. Anybody else have any questions? Okay, start the homework. Go ahead, Ulysses.
Oh yes. Are you gonna have office hours right now?
Not
After?
usually, but I have somebody needs to talk to me, so I'm going to have a quick session with Justin. Do you need to talk to me as well?
Yes.
Okay, why don't you do this? Why don't you set your timer for like 10 minutes? Give me 10 minutes with Justin, and then when the 10 minutes goes up, you can do the same thing, and you'll be in my office, and we can chat about whatever you guys need, whatever you need to chat about.
Okay, thank you.
Okay, but for the rest of us, let's come in before class and get our questions answered so I don't have to do the individual Zooming. All right, guys, good job today. Justin, I'll see you in a minute or two, and Ulysses, I'll see you in about 10. Okay? All right, guys,
Okay.
thank you.